Welcome friends, today we will discuss whether it's now the correct time to buy gold given that the Federal Reserve has signaled that it might start cutting rates from the September policy. Welcome friends to Sensex Ka Funda, the only channel which does not sell courses, does not subscribe to option trading, does no paid courses or masterclasses, and has no promotional agenda. We are the channel only for long-term investors, not for speculators or traders. Today we are going to discuss if it is now the time to buy gold. Gold prices gold prices are now at $3,373. Now, if you look at the all-time chart of gold, it has only consistently gone up. The scope of this episode is to see how Fed rate cuts influence gold prices. There have been reports that major brokerages are predicting that the Fed will start cutting interest rates in September. Major brokerages including Barclays, BNP Paribas and Deutsche Bank now expect a 25 basis point US Federal Reserve rate cut in September following Chair Jerome Powell's shift in tone at Jackson Hole towards rising risks in the labor market. Released on Friday after Powell's speech, Barclays pulled forward its previously expected September 2026 cut to September 2025, saying his speech introduced an easing bias and raised the bar for not cutting. BNP Paribas says Powell made it clear that the Fed intends to deliver a fine-tuning rate cut in September unless the data dictates otherwise. They reversed the brokerage's long-standing call for Fed to stay on hold, forecasting now cuts in both September and December. Meanwhile, both Macquarie and Deutsche Bank revised their expectations of a cut in September and December respectively to a 25 basis point cut each in those 2 months. So friends, let's discuss how the Fed rate cuts impacts gold prices. Since 1995, the Fed has undergone 8 rate cutting cycles, and this is a summary of the first rate cut in each of these cycles. You will see that in each of these, starting from 1990 to 95 to 98 to 2001 to 2002, 7, 2008, 2019, 2020, the Fed has cut rates, 8 rate cutting cycles. Now let's see what are the forward returns on gold after the first rate cut of a given cycle. The forward returns for gold after the first rate cut of the given cycle. So if you see here, 1 year it's 10% after the first rate cut cycle. In 2008 rate cut 10%, 2007 4%, in 2002 20%, 2001 3.5%, but in 1998 and 1995 there have been negative returns for the 1 year after the first rate cut. If we do percent of the time, so on an average on the day of the rate cut, gold is up 1.6% 75% of the time. Around 1 month, gold begins to struggle down an average of 2.5% and positive only 37.5% of the time. But in the 12-month mark, positive more than 75% of the time and returns 7.7% on an average. Is the summary of this analysis. Fed rate cuts are typically accompanied by quantitative easing, which boosts liquidity in financial markets and encourages lending and investments. These conditions of ample liquidity and low interest rates generally act as tailwinds for gold prices in the longer term. The Fed cuts interest rates. So if you cut interest rates, the dollar weakens. The dollar weakens and gold prices move inversely to dollar because it's a reserve currency and therefore gold tends to appreciate. Also, with the tariffs that are coming in, the inflation is expected to rise in the US. In the coming few months, you will see inflation data pointing that inflation has risen in the US because of the tariffs, and gold acts as a hedge against inflation. So that is the reason these are the two factors important that we need to realize why gold will perform well in the next 1 year once Fed starts cutting interest rates. It's still not certain that the Fed will cut interest rates in September. In fact, uh, the article in Financial Times today, Wall Street September Fed rate cut bets still hinge on next data. So Powell is waiting to see on September 15, 16 how the inflation numbers come, how the jobless numbers come, and then only he will take a decision on cutting interest rates. However, yes, he has started making dovish comments, and if he starts cutting interest rates, it will be a net positive for gold, and we believe that the time has come to increase the gold allocation in your portfolio. However, please do remember this is not an investment advice. You should make investment decisions only after consulting a qualified financial advisor. Thank you.